All right, it's time for another end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger reports. All right, so let's jump into what's been going on right now. In a nutshell, we're looking at a news-driven market. Markets being pushed around by every breaking news story. You got President Biden doing press conferences. You got, you know, Putin. You got a whole bunch of stuff going on. A lot of geopolitical risk. A lot of, warmongering, war sabering, sensationalism, and you got the reality. So you got rumors, you got reality, wars, rumors of wars, all types of things just colliding together at the same time. But on this daily chart of the US dollar, something interesting has happened. You can see the market has been in decline. It's been in correction, right? Full blown correction mode. And now the market is ready to try to gain some of that back. Still north of the 95 handle, the US dollar is relatively in a strong position. Still in a bull market, still got green on the screen. Just something to think about moving forward. All right. The bulls are defending the trend line support area, and looks like the market's ready to rip higher. Now, contrast that we'll see in the euro currency. All right. It is officially in a state of correction, and the market is declining and it is relocking back into the downside. So you got downside pressure. You're in the red zone on the euro, and you got a bullish indication on the US dollar. So as you see, um, the downside momentum is picking up on the euro. If things keep going the way they're going, I've said this before. It wouldn't surprise me if the euro finally broke par, and I wouldn't be surprised. Anything can happen. The euro hasn't broken par since its inception, when it first came on live, it was at the 88 handle. And then it quickly rose and broke par and has never looked back. But from a historical perspective, this is a pretty low print, having the euro, down to the, threatening to break the double digits and get to the single digits. I mean, we go all the way down here to 111. That's pretty impressive, and looks like the market's ready to test this old support zone as the market is hanging over the cliff. Looks like the euro is about to take a dive. All right, taking a look at what happened with gold recently. You can see here, gold has rallied, but we are still in the red zone. That has not changed. What an interesting factoid right now. Nice rally off of this low here where the market broke, and then it's just been kind of off to the races since then. Nice bear market rally. Bear market rallies tend to be powerful, but nevertheless, you're still in a bear market scenario, bear market situation that has not changed. All right, has not changed, even though you had this incredible breakout from the lows. Is it enough to finally possibly get a trend change? It's possible, but we're just not there yet. I know price action is above the trend line support, above the Kumo cloud, but still got a long way to go. Still got a long way to go. All right, flipping the script, looking at silver now. Here is your daily chart on your silver. So silver is trying to break out and follow gold. It's been the weaker of the two. Finally breaking into the $24 handle. Still in the red zone. and your trend line support is still in the Kumo cloud. So not as strong, not as powerful as gold. Does gold and silver have the potential to take out their uh, all-time highs? The answer is yeah, they do. But that's a long way to go. You figure gold is not far away from its all-time highs, but silver, on the other hand, is far away. This is, if you just looked at gold and silver on face value, it would look similar to 2007. In 2007, a year before the announcement of the financial, or I like to say the real estate crisis, we knew about the real estate crisis in '07. Um, but the rest of the world didn't get wind of it until '08. But in 2007, you had the U.S. stock indexes hitting new all-time contract highs on the futures, but the Nasdaq was not hitting new all-time highs. As a matter of fact, it had only gone 50% of the way. All right, and it still had 50% more to go. All right, so then when '08 came around and the U.S. stock indices collapsed, the rest of them had a higher place to fall from than the Nasdaq did. Well, this is kind of reminding me of that, because gold right now is breaking out in a powerful bear market rally, while silver really isn't. Gold is not far away from testing those old highs, but silver is only 50% there. It still has another full 50% to rally just to catch up to gold. So very interesting what you see happening in these markets. Now, looking at the geopolitical situation, um, it's kind of hard to say, and prognosticate. And I see a question about, triple digits. All that's possible is just not likely right now due to a lot of factors. You have the complete control of these markets. The precious metals markets have been controlled and kept at bay, so to speak, for quite a while. And that really hasn't changed much. If the markets were allowed to be themselves, then probably we would have $100 silver and, $3,000 an ounce gold, but we don't. We're a long way off from that. I think it would take a major story to cause that to happen. And I do mean a major story, like a nuke would have to go off or something in a major city to see gold and silver hit those price levels. Okay, so looking at oil, oil has got itself a little bit deeper into the corrective state. It is in a state of correction. It has turned bearish, turned red, even though you're still above the trend line support for now. The correction is on. The route is on. Look at this bar today. We had oil hit almost the $95 mark before dropping to settle at 91. So quite the roller coaster with that. Thank you. I appreciate that. Thank you very much, man. I appreciate it. Yeah, I've been working like a slave on these algos, my man. Keeping everybody in the game and on the right side of the market. So that's what's been happening. As things happen, you got to talk about it. You got to broadcast it. I think that the trend line support around the $84 handle is our initial target for now. We'll see what the market wants to do, but right now the bears are in control of oil finally. how does that carry over to OIH, which is our oil ETF? You can see it is leaning more so into that corrective position. And the trend line for this one is around the $220 mark. But you may have no ability to short OIH. So see if you can short XLE or short or get long DUG, DUG, something like that, maybe if you can't do futures. All right, here's the bonds right now. Ticker is TLT. I did do a small position in TLT. I think this one's going to try to get up to the overhead trend line resistance around the 142 mark. So we still got about another $4 to rally in the bonds. Hopefully the market will get there. It is green. The bulls are in control now. I think they're doing this, allowing the bonds to get a technical bounce here to try to get those interest rates under control. Because the lower the bond price goes, you know what happens to those interest rates. They move inversely of each other. Okay, last but not least, here's Bitcoin. Bitcoin futures. We have a primary rally alert tonight into tomorrow's trading. And the bottom of the Kumo cloud, just around the 40,000-ish mark is in play. So that's about, a good three points on that. So it's nothing to sneeze at. That's a nice little rally. I'll take $3,000 any day, Right here is your overhead trend line resistance in the bottom of the Kumo cloud. They kind of around the same area. So I'll say about, with an overshoot, we could get to maybe 42-ish. But right now, I'm calling the 40 for now. We'll see what happens. See if the barriers are successful to come in and smack it back down. But the market's trying to go green. It's trying to base out. Here's your bearish pointer from January the 24th, and the market is trying to say that we have successfully tested this, and the market's not interested in coming down and taking it out and just wants to rally from here. We'll see. We shall see. I think this low back at 32,855 is in play, and after this, whatever technical bounce we get from here, I think the market goes back down here. So FYI on that one. I don't think the selling is quite over. Short term, yeah, you can have powerful bear market rallies, but I don't think it's done going down. You know what I mean? All right, so let's take a look. You wanted to see Litecoin. Here's Litecoin for you. Pull that up. All right, so here's your Litecoin. Litecoin, the bears are still in control. All right, you're in the red zone. So you've been getting a lot of downside production from both the primary crash alert and the secondary crash alert. You even got a tertiary alert now, and the market's steadily giving you downside production, testing and taking out this bearish pointer here from January the 24th. So this one is falling off of the cliff, and it looks like it may drop sub 90. So FYI on Litecoin, looks like 90 is in play on your Litecoin. And last but not least, since you bought it up, let's go ahead and pull up XLE and see what it do. Let's go ahead and pull this up. Let's see. See what we got. Make sure I got the right one here. Yes, we do. Okay, so here's XLE. And you can see here a little bit more pronounced. The market tried to come up here and get off of the corrective state, and then quickly collapsed into the close. Trend line support around the 63, between 64 and 63, I think is the initial target on this downside. So anywhere from $2 to $3 is what I see coming to the downside on XLE. Here's the bear mark. I think that's where we're going. All right, we'll do one more. You want to see Draftkings? All right, let's go ahead and pull up the Draftkings. See what we got. Let's see. All right, Draftkings. Let's see, which one are you going to be under? You should be under this one. Let's see. All right, let's see what we got. All right, here we go. Okay, so this one has been in a very powerful bear market. Look at that. Your primary crash alert was back on September the 10th of 2021, and it's been nothing but downside production. Look at that. You fell from grace on this one. You fell from the $64 handle all the way down to the $16 handle. Ouch. All right, so something special happened today. So you had a primary crash alert on February the 16th. The following day, the market gave you downside production and then gapped down the next day. And then today, you went even lower and then rallied into the close, hitting a new bear market low, right? A new support low. You are picking up that downside momentum, all right? But something interesting happened today. The market put in a sign that it may be trying to bottom here. All right. If that's the case, then the overhead trend line resistance around the $25 mark is going to be in play for Draftkings. Okay. So Draftkings has been bearish for a while, and we had this gap. Now we got this possible rally tomorrow to try to close this gap. How much will the bulls be able to do? I don't know, but we got that green sign going forwards, even though we hit that new low today. So it could be that could be a possibility. We've done it before, okay, at low points. So we'll see. Maybe this is that support that Draftkings is looking for. All right, so we'll see what happens. Definitely refresh your browsers on your dashboard, okay, and follow your reports to the T. Don't try to second guess anything. Trade what you see. All right. A lot of these securities have stop and reverses on them for tomorrow. So you're looking at taking a long and or short position for the futures, the forex, and the cryptos. On equities, obviously, you're going to be long only for a lot of it. You may be able to short some. Some of them may be available for shorting, but for the most part of equities, you're pretty much, you know, you can short the ones you can short, but if you can't, then you're just on the sidelines. For my long only people, you're just waiting for your next possible buy signal. And I think Draftkings is maybe that possibility for you tomorrow to take a little nibble and see if the market does catch you on a bounce tomorrow morning. We'll see. All right. So with that being said, you know what it is. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.